All right, Bulls and Bears back with another dose of economic reality. I have dug through a lot of news. Some news I found out just by myself, just locally here within my area of San Diego. Other news I had to search for on the internet. Either way, I think you're going to like this update. Please make sure you're subscribed. Stay ahead of the economic transition that we are headed into. We are rounding the corner on this economic transition, and things just got a lot worse as usual. Let's go ahead and get into some of the news here regarding the economy and everything connected to your money, my money, everything in between. All right. First of all, we're told that the economy is good. We're told that inflation is slowing. Everybody is supposed to be happy about that. Everything's fine. Well, there's some surveys that just came out that are pointing to not everybody's fine. In fact, close to 80% of people saying they're in big trouble financially, folks. That's up. And we'll talk about that a little bit later in this report. But first of all, just to give you an example of some of the uh, desperate people out there, we have a food program here in California. And in San Diego, anyway, what I just found out here is that it's breaking records. So people need assistance more than ever. This is called the Cal Fresh program. It's enrollment just broke another record. So if everything was fine, if inflation was slowing and people are getting caught up on the cost of living or gaining ground on the cost of living, is what they're saying. If that's true, why are we breaking records for CalFresh enrollment? The county is experiencing a record enrollment of CalFresh food supplement program as of June 1st. This is a new record with more than almost 400,000 people here just in San Diego County getting this assistance, right? Why do people need assistance? Because what they're making, if they're lucky enough to have a job, what they're making is not keeping up with the cost of everything. We told you this was going to continue to get worse. Going back years, people said we were doom and gloom, but we've been right. Things are worse and getting worse. Every time we look at the numbers, people are getting deeper in debt. People are getting more behind. The surveys show people are worried more and more and more about the economy, right? So expect things to get worse, folks. And what's going to be the breaking point? Is it going to be the banks? Will we see the big bank failures that everybody's been talking about? Will we see that kick off the next financial crisis? Will it be the consumer? Will we start seeing mass defaults on home loans, on credit cards? Well, we're already seeing defaults. It hasn't hit a exponential point yet where it's exploding to the upside. But that could be another thing that comes out of here. Or will there be the black swan that people have been preparing for with the wars right now, the proxy wars? A lot of things happening on that front that I won't get into, but things are getting more risky out there. So you might want to think about where you're keeping your money. The big headline: inflation is cooling. And this is what I was just talking about here. Inflation is cooling, but Americans' concerns about it are hotter than ever by one measure. 84% of TransUnion survey respondents said inflation was their top household finance concern in the second quarter. 84%, right? Again, if things were getting better, if inflation cooling meant things were getting easier, why would the number of people concerned about inflation and people saying they're struggling, living paycheck to paycheck, why would these numbers keep increasing every time we look at it? We'll look at that again next month. I wouldn't be surprised if it's 90% because things aren't getting easier, regardless of what they're trying to paint as the picture, right? People are fed the line that cooling inflation means things are getting easier. No, it just means things are getting harder, but not as hard as they were before. Like the pace has lowered, right? And here's an example. Right now, inflation, if you take away the 3 years since the shutdowns, since 2020, you take away the past 3 years, inflation is worse now than it's ever been at any point in history, right? So they're comparing now to the last 3 years, which were ridiculous with the shutdowns, supply chain issues, everything else, record money printing, money creation. They're comparing now to the last 3 years that was the worst ever. So now, because it's not the worst that it's been in 4 years, sorry, I bumped my mic there. Because it's not the worst that it's been in 4 years, they're saying this is better. But let's look at a chart here of inflation, and I think that you'll agree, and I think you'll see that things are very bad still. In fact, let's take a look at the CPI and go all the way to the right here. And look, ever since 2020, of course, after 2020, we saw the worst increase in inflation that we had seen going all the way back to the mid 1940s, right? And I'm sure if this chart went back more, it might even be worse than the Great Depression, because the Great Depression was more deflationary than it was inflationary. People couldn't afford anything, but not just because prices went up, but because a lot of people just went broke and lost their job. But if you look here, and let me see if I can circle this for you here. Well, actually, if you just look where my cursor's at, you see since 2020, the exploding CPI. This is the Consumer Price Index for all consumers. And this is the all items US city average. Now, we started seeing inflation slow down starting in October 2022. But slow down just means that it slowed down from this record pace that we saw from 2020 to late 2022, almost 3 years. Right? So this is not good. Just because it's slower now than what it was during the record breaking period doesn't mean that it's good. In fact, if you take away the past since 2020, if you take from 2020 to October 2022 out of the picture, we're the worst inflation that we've seen likely in over 100 years. But yet they want you and me to believe this is good news. And the stock market goes up on this good news because they expected the CPI to be 3.4 and it came in at 3.3. Hooray, hooray, rah, rah. Everybody's celebrating. In the meantime, minus the record breaking inflation that we saw from 2020 to October 2022, this is the worst inflation of all time. Do you see the gravity of this situation, right? This is a severely, severely bad situation. And I'm afraid what's going to happen with US consumers, especially the people that are buying this line, that things are getting better, that the Feds, that they have inflation under control. If they had inflation under control, why are they afraid to cut rates? Because they know the cutting rates is going to put a nail in the coffin for millions of more U.S. consumers, right? Well, let's get into some other news here. I think most of you know the real deal on inflation. I just always have to bring that up because every month I see the deception and the news that comes out about the inflation, right? So we got to stay on top of that. And some new viewers may not know, what's happening with the inflation and the fraud and the propaganda that's out there about this. Something else that I'll just touch on briefly. We see property foreclosure activity is on the rise. It's not at a point yet where it's pre-housing bubble level, but it is on the rise. Again, if things are getting easier or better, wouldn't we see the rate dropping even more? Right. So just something else that points to the underlying economic reality. The dollar tumbles and gold rallies on dovish U.S. CPI report. All right, let's shift over to housing. In our last report, we talked about 3 cities that are seeing significant price drops in rents as consumers are tapped out or reaching their breaking point. You're going to start seeing more cities with falling rents because you can't borrow money. You can borrow money to pay rent, but most people don't do that. It's mostly a cash flow, a month-to-month situation when it comes to rents. But take a look at this, and you can see that rents dropped. Apartment rents drop in 7 of 11 major California cities. Again, people are tapped out. People just do not have the extra money to pay these high rents. Now, speaking of high rents, what we know is that right now properties are being scooped up right now by corporations, investment firms, hedge funds. And if things weren't bad enough already, we haven't even seen the tip of the iceberg yet on these regional banks and their exposure to commercial real estate. In fact, PIMCO came out with another warning today. PIMCO warns of more regional bank failures on property pain. Basically, banks loaned out too much money. Commercial real estate shouldn't be priced where it is right now, just as residential real estate is very overvalued. But when it comes to real estate, just remember, in many states, including California, 1 in 2 homes that are purchased are bought by investors. And we're talking about big BlackRock, Invitation Homes, Blackstone, companies also that have a direct line to the Fed and just billions of liquidity at the push of a button. So what's their goal? Their goal is to own everything, and this is the Fed's, I think, long-term goal is to have nobody own anything. And even people that own, if prices just keep going up, if they keep getting bought up by investors, even people that own are going to see higher valuations on their property, and pretty soon the cost of ownership is going to go way beyond what people can afford. When you have higher property values, even if you bought back when interest rates are low, when home prices were lower, the ultimate raising property taxes is going to push people into the bankruptcy line. Plus the cost of upkeep, everything is costing more. A new roof, new air conditioning, new heating system, it's all going to cost you more. And it's not just me saying that; the inflation number is still going up. It's just going up more slowly than it had been previously. So it's still a disaster for a lot of people, folks. All right, let's transition a little bit here. I've got a couple visuals that I want you to take a look at, and I want you to let me know what you think about this down in comments, right? So we're told that the jobs numbers were great, but in May it was 270,000, something like that, even though the newly unemployed exceeded 900,000. So that was another scam that we exposed just a few reports ago. But the jobs that are added, are they good jobs? Well, take a look at this chart. I think you'll agree with me that this is a lot of hot air. Job change since May 2023. So in a year's time, look at we have this many part-time jobs, right? And these are in the thousands, right? So it's really 1.5 million, but a loss of about 1.1 million of full-time jobs. So when they tell you that these newly added jobs mean the economy is growing. Well, the economy is growing in the wrong direction. It's growing where people have to work multiple part-time jobs now, because full-time jobs, as you can see here, full-time jobs are being shed while more people are working part-time jobs, right? So there's another dose of economic reality when it comes to the jobs numbers. So just remember that when they come out with these reports. I just want you to know the truth behind the numbers here. Also, who's getting the jobs? Well, it's more and more people that weren't even born here in the country. They're migrants. And look at a chart right here. We have native versus foreign-born workers. And we see the green. The foreign-born worker percentage is exploding higher. And we see native-born just kind of skidding along here, bouncing along the trend line, right? So another piece of the puzzle that I don't think I haven't heard anyone else talk about this here on all the economic channels. Again, some of these channels, like I mentioned this here as often as I can because I think this is so important. Some of the channels out there, including right here on YouTube, have been telling you home prices are going to crash. They've been telling you there's going to be an economic collapse, stock market's going to crash. Folks, not until we see the end of the way that money can be pumped out into the economy. So if we went the directions of, let's say, the BRICS nations, where things are commodity backed, or you're integrating precious metals back into your monetary system, until that happens, or until there's a pullback in the lending, we're going to see inflation get worse. You're not going to see a crash. You're going to see prices continue to go up. You may see things like rents drop a little bit. You may see some relief here and there, but overall, it's going to get more expensive and more costly as we go along here. And somewhere else you can look is the cost of restaurants and especially fast food. Look at here in California, they had to raise the wages because the cost of living is so enormous that now restaurants, and a lot of them, are actually raising prices. Here's another one. In-N-Out Burger, a very, very popular burger place here in California, raising prices in response to minimum wage hikes. We have this now $20 an hour minimum wage for fast food workers. So if everything gets more expensive when the minimum wage gets increased, then what good does it do? Because the people making minimum wage, now they've got to pay more for everything else, right? So this whole thing is a failed response to the cost of living crisis right now. You've got bureaucrats and politicians thinking they're going to make things better, and they have to do something in order to justify keeping their jobs. If they just sit there and do nothing, people are going to say, okay, why are they there? So they have to do something. And when they're forced to do something just so they don't lose their jobs, they're rushed or pressured into making any decision or into doing something instead of just doing nothing. And in this case, doing nothing would be better. So the things that they're putting out there are actually making things worse, not just here in California, but nationwide. And here's an interesting illustration that I found here. This is German kids flying a kite made of worthless money back during hyperinflation back in the 1920s. And we're able to pump more money into the economy now than back then. Remember, they had to print it back then. It wasn't credit cards and debit cards, of course. So they had to print it. Now they don't even have to print it, folks. It's mostly digital. It's a click of a mouse. Trillions of dollars can be flooded into the economy. So what do you think is going to happen, and what are you doing to prepare? I won't even tell you what I'm going to do because I've said it so many times that I think most of you know what I'm doing, continuing to stack. But please let me know what you're doing to prepare for this down in comments. Is it going to be deflation? Are you holding cash because something's going to break, either the consumer, the banking system, a black swan, and you're going to see deflation, therefore you're holding cash? Or are you ready for inflation to continue to get worse because you know they're going to keep on flooding the system with money and nothing's going to stop this money creation and this money, basically helicopter money, money printer go burr. All right, like to hear from you down in the comments, everybody. Thanks for watching this report. We'll talk to everybody very soon. Keep stacking. Bye for now. Peace.